Hey everybody, this is Jose Blasco. How are you everyone? We're about to start, 30 seconds to go. This is a sound check. Please go ahead and click and type, I should say, a quick message on the chat box, a quick hello would do, so I know you hear me and therefore we know the sound is good, so we can start on time. So quick hello, please. That would be appreciated, so I know it's all good from a technology point of view. Very nice. So we just arrived to the starting time of the session. I can see your messages on the chat box as well, confirming that you hear me well. So that's very nice. And hello, everyone. Good to see you. Welcome to the session today. Today is May 21st, 2020. I can see Boyan. How are you, my friend? Leland, Sandeep, Tui, Mufid, Furman, and more. Wonderful. Wonderful. And thank you very much for joining me today, as always. So let's get started. Today, as I was saying, it's May 21st. We are getting together today to talk about longer term trading. So as always, the routine will be to look into the options markets. We're going to be looking at opportunities to be directional. We're going to be looking at opportunity to be non-directional. Everything will be utilizing, let's call it intermediate time frames, if you wish. So we are looking for trades that may last a few days, a few weeks, something like that. But again, we'll be more concrete as we start with the charts on specific trade setups and specific rules. Okay. Before we start, disclaimers. I'll read it quickly and we start. Disclaimer: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand. Let me say that again. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. And that's the disclaimer. Therefore, the introduction is done. The session is officially started and we are ready to go. So here is our trade station. We have our scanner, our market screener here looking at a series of opportunities that I'm going to explain in a minute, and we'll be jumping on those charts, looking to see if those setups meet our rules, and if that's the case, then ready to execute. If it's not the case, then we move into the next opportunity. Not a big deal, okay? And always mechanical, always discipline. That's our approach to trading, okay? Before we look at the charts, very quickly, I would like to show something important related to our calendar in the month of May, which is that you may realize that there is an addition of a new session that will take place on next Tuesday, which is a session called Do's and Don'ts in Trading. And I'm sure that Boyan is having a little smile on his face right now. Isn't it, Boyan? So we're going to be doing a live session called Do's and Don'ts. This is to me a pretty relevant session because even though in that session we will not spend much time with charts, looking at trade setups, in that session we're going to be talking about things that are quite generic but applies to all traders and all trading methodologies. And sometimes the reason why traders struggle is because some of those don'ts, and sometimes the reason why some traders really kill it and do an incredible job in the market is because some of those do's. And this applies to all methodologies and all trading styles. So it's an important session. It's kind of like one of those opportunities to stop and think and then continue. So just wanted you to be aware that the session is there. It's a free session, by the way. We will not be running it on the YouTube channel. So you have to register for it. You have to click on it. Okay. And the moment you click on it, it will bring you to another page. Okay. Do's and don'ts in trading. And you can see here, we have a link, special link under You Can Trade. So you click You Can Trade here. And the moment you click on it, you will see a registration page and you can go ahead and click register now. As I said, it's free and it will take place on May 26th at 7 p.m. New York time. Okay, quick one, but I didn't want to miss that since it's the first time that we're going to be running this session here in our community. Okay, guys. So just for you to know, so you are aware of that. Okay. And by the way, feel free to spread the word because it's a good one in my mind. Okay. Of course, what can I say? I'm going to be teaching it, so of course I'm excited. But again, I truly believe it could be very impactful to some of you guys. Anyway, so back to trading. We are now looking again at the screener. So the way we normally start the sessions is by doing this. Okay, normally I would zoom in and point at the bottom part of the opportunities here, which is directional opportunities, using debit strategies, bull call spreads to go long, bear put spreads to go short, using options, and then credit opportunities, where normally our favorite starting point is to look at the purely non-directional. This is where you normally get the greatest credit, but not always the market setups are favorable to those opportunities. So then as a backup plan, we got the neutral long and neutral short opportunities, which are the two below, which normally we check in the list. If I think of sequence of what I do first, normally I would start with the non-directionals, then the directionals, and then if we don't find anything good, then we move into neutral. Okay. So therefore, I'm just going to click non-directional and begin the session looking at what the scanner found for us. Okay, if I sort these based on price, you can see the scanner has found opportunities with Costco, Salesforce, Tiffany's, Walmart, and then we got IEF, which is an ETF, and therefore that one will pass. So in other words, we got 4 potential opportunities. Okay, they are potential, may work, may not work, but the scanner is telling us that this could be a good trade. So let's begin with Costco, and of course, immediately the moment I load Costco on TradeStation, I will do the same on TradingView. I'm looking at a daily time frame of Costco, and the reason why I'm going to do this is so I can go ahead and point at the next E bubble on the bottom, which represents the earning date, which in this case you can see it's May 22nd. So sorry, May 28. Okay, May 28. So today, okay, it's May 21st. Okay, May 28 happens to be next Thursday. So we cannot use May 29 expiration because it's after earnings, and earnings may create a large movement in price, a large gap. Okay, and we cannot do non-directional trading while we expect a gap. It's a contradiction. So then the only way to put together a trade on Costco would be to use May 22nd, which is tomorrow expiration date. Normally, one day to go will make it difficult for the trades to work. But I have to say that Costco being a $300 stock, well, we may have an opportunity to have this trade work. Plus, we can see 56% probability if we use regular session data, which is good. We normally need 48% or above, okay, for us to accept the trade. And if I look at pre and post market, we get 54%. Okay, and what makes me happy here is the fact that now I got 2 green UFOs, one here and one here. Okay, and the reason why that makes me happy is because we have a rule, isn't it? Which is that we do non-directional trades using at least 2 UFOs. Okay, one is not enough. And the reason why that makes me happy is because if I go back to regular session, notice how there was only 1 green UFO. Okay, there was only one. And 1 green UFO is not enough for me to put a trade in place. Okay, so in other words, I could be using the 287s. Okay, the 287s, and this realistically is quite far from the current price. So I'm not really sure this is going to work from a premium point of view because this is going to be very far. The further away the price is from the option strike that you will select, the less premium you will get paid. Okay, and the put side certainly concerns me because it's far, but if I want to do a pure non-directional trade, I now need to move and look for UFOs equal distance to the upside, and that basically is bringing me around 317. So I don't want to spend much time that is not well utilized, and therefore what I'm going to do is, before any further plan, I'm going to look at options around 317 using the call side and look at and see if we get paid at least 35 cents, which is the minimum that our methodology requires to accept the trade, at least in an initial stage. So I'm going to look at the 317 or above call, something like that, okay, or maybe the 315. We'll see what's available on the option chain because it's a higher price point stock. We may have $5 price strike increments. Okay, we're going to see that in a minute, the moment we got OptionStation Pro loaded. Okay, and in this sense, so we will see what's possible. Okay, so OptionStation Pro is It's taking a long time. I would say longer than expected. So I'm concerned that maybe I may have to restart TradeStation here. Not sure why this is. Okay, now finally it's loading. So maybe there was a little bit of a delay with connecting with the data servers. This sometimes happens in my end because realistically I'm quite far from the US. I am located in Singapore, some of you may know, and therefore being in the Southeast Asia, not only I am in Asia, I am in the South as well. So I am far, okay? And sometimes there is a little bit of latency, and this slows down the launching start process of TradeStation. Okay, but anyway, so loading Costco now. I'm going to look at May 22nd expiration date as the option chain loads. Here we go. So May 22nd, right there. So if I look at the 317.5, for example, that would be a valid one. Notice that we only get paid 16. If I look at the 315, I get paid 17. So it's not acceptable because our minimum is 35 cents, isn't it? And we are being paid basically half. And again, it has to do with the fact that the earnings date is too close, and the strike prices that we will need to pick based on vertical distance are too far. The two things together is basically invalidating the trade. So what do we do? Well, not a big deal. We just click CRM and we go check if CRM does gives us an opportunity, because Costco does not. Okay, so let's look at CRM. So CRM. Okay, so what do we have when it comes to earnings? Okay, it looks like earnings are going to happen soon as well. 29th of May, so that's Friday, but again, we have the same story. Okay, same situation. We can only use the 22nd. Okay, we have 53%, which is over 48. That's good. Only one UFO. That's not good. Let's check pre and post market to see if we got more than one UFO above, and we do. Okay, and not only we do, actually we have 55%, almost 54.99, which is clearly above 48%, which is the minimum we need for the non-directional trades. Okay, so all of this validates at least continuing looking to see if the trade will make sense or not. So I'm gonna look at this upper point. Okay, 184.96. Okay, so 183.96 is 184. So let's see what's available for that stock. CRM. So CRM. Looking at the 184, probably is going to be 185. So let's see what's available. 185. Look at that. We are only getting paid 8 cents. Okay, so yeah, not working. Not enough premium for the trade to be taken. I thought this one could work. Because those red UFOs were quite close, but I guess that the stock has not behaving too volatile in recent times, and therefore the premiums built in are not that amazing. So the expectation is not that much. So then what do? We move into Tiffany's. Okay, and we're gonna do the same, loading the chart here. And while the chart is being loaded, I'm gonna check earnings for Tiffany's. And earnings for Tiffany's would be happening on June 5. Okay, this gives us more freedom. Okay, it gives us more freedom because now we can use May 24, and using May 24 we make a big difference. Okay, now certainly not with 40% probability. Okay, so let's check regular session. Okay, and hopefully we're gonna be above 48 to accept the trade. We got 58, so that's very good. Wow, what a fat UFO we got there. This is one of the biggest UFOs ever, isn't it? Very, very big one. Okay, so again, everything looks good for the trade to work out, but this extremely fat UFO is killing us, because basically our rule is to use 2 UFOs. So we need to point at the next one, right? And if I look at the vertical distance, okay, from current price to the second bottom UFO, and I project this to the upside, well, it's out of the range, kind of. Okay, so in other words, we need to sell options so far away that, let me tell you what's going to happen. Even though I could use 1 week more here, I could use May 29 instead of May 22nd. It would still not be enough. So it's looking like we may have one opportunity, which is Walmart. So let's take a look at Walmart and see if Walmart is going to be a yes. And if not, we will move into the world of directional trading. Okay, we just adapt to what the market gives us, no preferences. Okay, and Walmart is certainly giving us up to August 18. Earnings took place when on May 19. That was 2 days ago. Okay, so the prices of the options probably stabilize, and after 2 days after earnings, and the scanner is picking up that market, so it's certainly all good. Notice the very large movement that took place on that day, a very long candle. This is the earnings, okay? So all good, all of these already stabilized. The screener is still giving us a go. And then the next earnings are August 18. So all of this is looking very good for a trade to be put in place. We got 59% probability when looking at Walmart in a regular session data chart. So what about pre-post market? We got with pre-post market we got 55, which is also valid. Okay, so let's see, we got a red UFO here. Okay, I need to find two UFOs above. Okay, this is what I'm looking for now. If I move to regular session, so the red UFO we found earlier lines up perfectly with the red UFO that we have on the regular session. So even though it's two UFOs, they count as one because they are in the same place on the chart. Okay, so if I move up, as of here, I see no other UFOs. Okay, so I'm gonna have to load a larger time frame chart. I'll start with daily to get to understand better what is above Walmart. Okay, in the larger time frames, and I'm gonna move all the way to the monthly time frame to see where we're at. And where we're at is a problematic situation, really, because basically that stock is making all times high. So when I move down to my 55-minute time frame and I see that UFO, that top that we can see here, that top represents all times high. And notice that we got nothing else on the chart, meaning that we only have one UFO. Red color UFO is only one, and our rule says for non-directional trading we need at least two UFOs of each color. We only have one, so this trade is to be discarded. Okay, and it's a sad story, but it's what it is. Now, having said that, I could see a potential setup forming, which could be valid later today, 1 hour or two from now, maybe tomorrow. But if Walmart was to fall a bit, okay, if Walmart was to fall a bit, we may have a UFO forming somewhere here. So next thing you know, we got two UFOs above, two UFOs below, and price is more or less in the middle. So guess what? That would be a valid setup for an iron condor, for a non-directional trade. But we don't have it yet, so I cannot just predict and hope that's going to happen and take a trade out of hope. We don't do that. I'm just pointing at it because it could happen. And if it happens, here is your setup. And if you are a trader who basically look at the market multiple times a day, you are at home, you have nothing else to do, and you take a look at the market 2 or 3 hours from now, you may get to see that opportunity. Okay, so just keep an eye on that. It may be an opportunity. Okay, guys, I'm gonna take a sip of water if that's okay. Thank you for that, and let's continue. So, by the way, I'm going to rerun the scan here on non-directional to see if an opportunity arises. And while the scanner runs, I'm going to move into the world of directional trading. We have many opportunities for directional trading. We got 34 stocks. Okay. For directional short, we only got one. So you know what? Let's start with Procter and Gamble. Okay, it's only one. So we can either accept it or discard it very quickly. So let's do that. So I click on PG. Okay, the charts are loading. Okay, so we're gonna get to see the climate. The first thing I want to check is the climate. That's what I care the most first, because if the climate is not favorable, then there is no need to continue thinking about the trade, because there is no trade. Okay, so let's see what we have. Well, let me tell you that from a climate point of view, we do have an opportunity here. The current climate is certainly defined and confirmed with a thick dot. Okay, it's red and thick, so confirmed to the downside. We got 3 candles into the climate, and the climate being down, we focus on this value for 36. We always round up, so it's 5, meaning that we're in a climate that should last statistically usual thing, if you wish, statistically speaking, would be for the climate to last 5 days. In this case, we are day 3, so we can still catch a 2-3 day trade. And if the climate expands further, which many times that would happen, okay, like here, that's more than 5, isn't it? So then you can catch a longer lasting trade. Okay, so we got something that may be an opportunity. We got 51%. That's good too, because for directional trades to be executed, we need 50% or more, and that's 51. So then the next question is, okay, what's my reference point? And my reference point happens to be the value of the EMA, which is 115.81. Okay, so 115.81 is my reference point, which is somewhere here. And if I look at that UFO there, that UFO starts at 115.96, okay, which I would say it's close enough, especially because the current value for the stock is 112. So if the stock comes back up into these UFOs, guess what? The EMA will have a slight bending to the upside, and therefore that 115.80 may become 115.90 or something like that, and we're gonna say it's good enough because 115.96 is the beginning part of that UFO. So that's good. Now, in any case, I also want to check the pre and post market data to see if we got a UFO there, and also the probabilities. So 51% is what we got with regular session data. Let's see where we got more institutional interest. Certainly not pre and post market. It drops to 45. Okay, so we will ignore pre and post market. Everything should be done based on regular session data. And we got a valid entry here with that particular UFO. So what I'm going to do is I'm just going to move into putting together a target. Okay, so I'm going to turn on, not there, here we go. I'm going to turn on AutoUFOs. Okay, turning on AutoUFOs, and the next green UFO, that would be the candidate for the target. Okay, so we are looking at Procter and Gamble, and we can see the location for the target would be $96.41, which is the top part of this green UFO. Okay, so this is where the target should go, based on where the app understands the on-field orders to buy are in a larger time frame in this case. Oh, wait a minute, guys. Wait a minute. I'm just making a mistake here. I'm looking at the weekly time frame. I made exactly the same mistake last Thursday, and I think the additional mistake I made is that I didn't save this as a workspace. So it was the weekly time frame what I was looking at. So that may change a lot everything. So let me reassess the whole thing, guys. Sorry for that one. So unfortunately, and by the way, let me save the workspace first so I don't forget this time. So that it is safe. So unfortunately, I'm gonna have to say that we are gonna have to ignore this opportunity with Procter and Gamble. It's a shame, but that's what it is. And here's the reason why. The reason why is now I am indeed right here. I am now. One second, guys. So why is it? Okay, now. So good. So notice how now I am using the daily time frame. Okay, so that it's done correctly this time. But notice that even though the climate is defined, it's 2 out of 3, and that would be valid. The problem is that the EMA being 113.88, okay, being 113.88, so we don't have any EMA around 114, isn't it? Let me see, guys. I'm not sure what's happening to my screen. Okay, I got my zooming got locked. So it is one of those things that is funny and is not funny at the same time. So give me 1 second to see if I can. That's it. Okay, I unlocked the problem. Sorry for that. I'm not sure what just happened there. But anyway, long story short, we are looking for UFOs around 114, and around 114, we don't have UFOs. Okay, so that's the problem we're having, and with such problem, so obviously we cannot plan the trade. Okay, so what I'll do is I'm just gonna click and run a scan on short opportunities just in case we have anything later. The non-directional scan is still running there, so we'll leave it alone. I have very slow settings on my scans. Let me show you that just in case some of you are also living in locations far away from TradeStation servers, where you see I got the preferences of the settings for the scanner, giving each symbol an additional minute to load, just to make sure that if there is delay on the data transmission, no information is lost. So this guarantees that the scans are going to be more reliable if you live in a location far away from TradeStation servers, like such as living in Asia. But unfortunately, it makes the scans to take a long time to process. Okay, so but anyway, so we are now looking at opportunities to go long. So I am sorting everything based on the price. Okay, so we have here CMG $1,000, Tesla 800, Apple 300. So I would say let's start from Apple. Because again, even though it would be absolutely valid to trade Tesla and Chipotle Mexican Grill, the fact is that I would expect that the majority of you in the session are in learning stages, and that's why you are part of these sessions, and therefore you are probably practicing taking it easy with your position size. And if that's not the case, which I would also expect some of you to not to be in that case, so then you can certainly replicate what I'm about to do with Apple to Tesla or CMG, and you can do that on your own. Okay. So what do we have with Apple? Well, we have a climate which, based on stats, should last 9 days, and that climate has been expanding for 21 days. So absolutely overstretched market, absolutely overstretched. So I'm just going to move to the next one, which is Home Depot. Okay, we are looking for opportunities that are a bit shyer, if you wish. Okay, we don't need those amazing moves, because the problem with those amazing moves is that if you are in from the beginning, great, but if you're not, then it's not sustainable. Okay, so that could be problematic. Okay, so what do we have with Home Depot? Well, a very similar situation, even more exaggerated. 32 days into a climate which, based on stats, should be 7 days. Okay, incredible moves, incredible moves. When you think about what's happening in the world, fundamentally, or health wise, and you look at those moves, it totally makes you understand how the reality of the world and the markets are two different animals, because this is absolutely not explainable, isn't it? But anyway, by the way, for the ones of you with this is Microsoft. Okay, so for the ones of you with a Microsoft trade that we put together some time ago. Okay, so manage. Okay, so we have here the Microsoft trade. The other day we saw the Microsoft trade was looking negative. Okay, it was I don't remember. I think maybe negative 200, something like that. Notice that we are now close to breaking even. Okay, and remember the origin of this trade was to profit from a potential breakout. Okay, so notice how Microsoft is now coming back, reaching the all-time high, and if that's going to be broken and continue, we are probably going to face a very, very, very strong impulse to the upside, and the trade that we took the other day is about to profit from us. Now, another way to expose yourself to Microsoft is just to follow the normal process, because the process that we did with Microsoft was based on the weekly time frame, and that was actually the reason why I had the weekly time frame on the climate chart, okay, on the common time frame, because we planned a trade with Microsoft. That was, I believe, 2 weeks ago, maybe something like that. Let me take a look at questions here. Fairmont, how do you set up the scanner? We have a session on that on the sharpening playlist of the channel, so I would like you to take a look at that so you have a proper explanation, because it's long to explain. But bottom line, if you shoot an email to us, reach at tradewithufos.com, and you ask for the scanner, so we will send you a file, and you can basically import it into your TradeStation, so you don't have to program the scanner yourself. You can just import our file, and that's it. Okay, so take a look at the playlist, so that way you become aware of what you got in your hands. But also, to save time, feel free to send an email to us, reach at tradewithufos.com, and you will get the scanner. Okay. Oh, look at that. Boyan already answered that. Wonderful. Thank you for that, Boyan. Wonderful, my friend. So anyway, so let's continue. So what I was saying is that for the ones of you that want to approach a trade on Microsoft, we can just follow our normal process. And in this case, the normal process is giving us a go, at least from a point of view of climate, because we have a confirmed climate, thick and blue, 4 candles into the climate, and being blue, it means that we expect the climate to be at least 7 candles. Okay, so 7 days. So 4 days out of 7. So it's giving us the opportunity to enter at least a 3-day trade. And if it does propagate and expands, like it sometimes does, like here, okay, so then that could be a pretty nice trade. Okay, so having said all of that, we need to find out our reference price, which is the EMA, which is 183 something. And the question is, do we have UFOs at 183 something? And the answer is yes. Okay, so we have a UFO there starting at 183.46. Okay, 183.46 for Microsoft. Okay, 183.46 for Microsoft. And certainly it's lining up with the EMA, and the climate is giving us a go. And on top of that, Microsoft is coming down, coming down, coming down. So if Microsoft touches that UFO, it's time to take the trade based on our rules. Okay. On top of that, even better, we got multiple UFOs below to defend ourselves. So everything is looking good from that angle. So therefore, let's go ahead and load Microsoft on the option chain, so we can put a trade together. So Microsoft is loading. TradeStation is asking us to please wait in the center part of the screen. So we will be obedient and wait. Thank you very much. Patient space. Here is Microsoft. And now, of course, what we need to do in a normal process will be to find the target, calculate the time to target, and from there pick the expiration date. But what's the problem here? Well, the problem here is that I cannot calculate the time to target, because in this trade there is no target, because Microsoft is about to begin making all-time highs again. And if Microsoft begins making all-time high, so what happens is that, setting a target may cap a lot of your profit. And if you set a target, it's going to be whatever figure you feel is good, and whatever you feel is good is certainly subjective. So instead, the idea would be to follow price, okay, and just keep following the price of Microsoft based on new UFOs that may form. And if price was to ever trade through one of those UFOs, then exit the trade manually. By the way, you can use a stop order, okay, but with options you may get slippage, so it would be better to set alerts and do these actions manually. And therefore, if Microsoft was ready to break out and really hit hard to the upside, so next thing you know, you can collect a very, very powerful profit. Actually, these kind of situations, we have seen that before, actually many times, and we have taken great advantage of trades last year, for example, big time, over 2019, isn't it? And when we have trades like that, instead of setting up spreads, we just go ahead and buy a call, just like a call, to cap the profitability of the trade, just in case we have one of those major breakouts. Okay, so therefore, no target, and therefore the question is, okay, so how do you decide about the expiration date? And therefore, what we do is simply look at the next earning date, because we want to be out before earnings, right? Because we can have a gap against, right? So then the next earning date is 16th of July. And therefore, that is the expiration date that we will want to utilize for this trade, which is going to be, in this case, 17th of July, which is a trade with 57 days to go. Okay. Now, we got 180, 185, 190. So the trade that we're putting together here, okay, is a trade where we're going to be entering using that UFO, which is 183.46. So keeping 183.46 in mind, okay, we will want to buy an option slightly above, because remember, the rule that we have is to use options which are between the entry and the target. Okay, so therefore slightly above, okay, when keeping in mind that the options here are $5 strike price increments. So that's going to be the 185 call, and therefore I'm going to right click to analyze and buy, a single option, which is going to be buy the 185 call. Okay, here I have it. And well, I have a lot of additional things here. And by the way, I have a trade running. Okay, so I need to make sure that this trade, the custom trade I have here, okay, this is a position. Below is a simulation. So that position I need to uncheck. Okay, I need to uncheck so it doesn't distort my analysis. Okay, and from here, we said 183.46 was going to be my entry, and we're going to use no target. Okay, so my question is, what type of delta am I going to get if I use the 185 call and the stock drops to 183.46? And the answer is 49, which is too much because our goal is to get something around 30. So that it's basically telling me that the right strike to be used is probably the next one, which is 190. And when using the 190, we can see now the delta dropping to 40. So guess what? Maybe the 195 is the strike to use. So let's see the 195. And the 195 is giving us the 30 delta that we want. Okay. So this is the strike we're going to use. We're going to use the 195 call, providing that 30 delta. Okay. And that's a very simple trade. I'm just going to go ahead and place the order. Okay. So just very quick to make sure everybody follows. The trade would be to buy the 195 call that expires on July 17, 2020. But only if Microsoft falls to 183.46, this will be the triggering condition for us to execute the trade. Okay, if Microsoft stays where it is or goes above, we don't buy the call, because then you buy the call when Microsoft is in the middle of nowhere. You want Microsoft to fall into the UFO, so the buy on field orders kick in, and that is going to increase the probability of Microsoft now move up, and then now therefore increase the probability of you making money with the call. Okay, so that's what we're going to do. And therefore, I'm going to click on the three dots. I'm going to click on trade, and this trade, I'm going to place it here. By the way, I didn't talk about the risk of the trade. Okay, so let's talk about this very quickly here. So this trade has a value of $360 expected value at entry. So if you buy one call, you are risking $360. If you buy two calls, you are risking double. If you buy three calls, you're risking triple. So make sure that your risk appetite is 360 or above. If it's below, then this is not a trade for you. And if it's above, you just multiply, whatever amount of contracts you want, times 360. I'm going to go with one, as I always do in the sessions. So I will click market order here, but it doesn't mean I'm going to get filled now at market price, because I'm going to use an activation rule, which, as I said before, and if you have never seen this before, you will see it very visually now. That activation rule will be depending on the price of Microsoft shares, okay, dropping, okay, to be less than or equal to 183.46. So if Microsoft reaches that value, which is below the current price, as you can see on the top, is 184.71. So if Microsoft drops to 183.46, that will activate the order, and then I get filled. If not, the order will never be activated, so I never get filled. I'm in waiting mode. Okay, so click OK, click place order. Now you will have a window for a quick review. Confirmation by one of the 17 July expiration 195 call if Microsoft is less than or equal to 186.46. Yes or no? 1, 2, 3. Yes. That's it. So the order is in. And now if I move to my manage tab, okay, you can see now I got my Microsoft order right here. Okay, so the order is waiting to get filled. This is a receive order. Below is the position. So below is the orders that got filled. Remember, we have a trade running on CVX. Okay, that was a put spread. So this trade is a trade betting that CVX will fall. The market have been moving higher. Okay, so I'm very happy if I get. I'm very happy actually with the setup I have, because I'm almost flat deltas, isn't it? Minus 33 plus 24. So in other words, if the market falls, my Microsoft trade will lose, but the CVX trade will profit. okay, and vice versa. So I'm in a position where I have a little bit of a hedge, okay. But again, more about hedging is we talk about that on the sharpening sessions. There is a little bit of information about hedging, and if you are not 100% with me on what I am saying here with hedging and gamma hedging and things like that, I strongly recommend you to go and watch those sessions. That's very important stuff. Okay. Because when you trade stocks, you're gonna run multiple trades in parallel, and you wanna make sure your Greeks are properly balanced. Okay, good. Mark, why not to do a bull call spread? Well, Mark, you could, but then you would cap your profitability. And given the fact that that stock is potentially going to make all times high, this is normally followed by a very strong impulse where many people jump in as the breakout takes place. And if the breakout have some follow up, it's certainly worth it to increase the cost of the trade a little bit by buying a call, a single call, versus, yeah, true it is that you lower the cost of the trade if you do a spread, but you would also now cap your profitability. So instead, my proposal to you, as we have done many times last year, is to just go with a naked call, in this case, a long call, because then there is no capping of the profitability. Okay. I mean, I know you know that very well, Mark, but just to be visual, when looking at the risk profile graph, the more the stock goes, the more you profit, and there is no limit. Okay. So if the stock, reaches, 210, this trade is going to pay you $1,500 almost. Given the fact that you're risking 350, that's amazing. If you were to do a spread, you're gonna make so much less. Actually, there is a moment in time where no matter how higher the stock goes, the spread don't pay you any longer because the option you sell against the option you buy will cap the profitability. Okay, so in that sense, it's not what we want. Okay, so anyway, so we got one directional trade with Microsoft. So I would like to go back to non-directional to see if we got new opportunities because the scanner completed. Okay, and it seems that nothing was found, so nothing is new. Okay, nothing is new. Directional to the downside is still loading. Okay, so I guess that we can still look for another trade, and let's see if we can make it work. I am attempting, by the way, guys, to be a bit more compact with the duration of the sessions that we do on the channel because sometimes they are a little too long. So I'm shooting for 45-minute sessions instead of 1 hour plus. Okay, so I'm gonna be looking into the next trade, see what happens in the sense of is it meeting the rules or not, and hopefully we can find another trade, and then we will call it the day. Okay, so if you guys have any questions, for sure, make sure you type them so I become aware that you have a question and I can give you an answer. Okay, so what do we have with McDonald's? So with McDonald's, we have a situation from a climate point of view which is favorable because the climate is confirmed. It's 3 candles into the climate. This climate should be 7. So 3 out of 7 give us a go to plan on a trade. Okay, now I still have pending data there with McDonald's. Okay, just load it, 53%. So that is certainly good. It's over one. It's over. How do you call it? 50%. And our reference point is 180.17. Okay, so 180.17, I believe, falls perfectly inside that UFO that begins at 180.94, as you can see here. Okay, 180.94. Okay, so McDonald's seems to provide a valid setup. I just want to check out of curiosity and fine-tuning the trade. I want to check pre and post market. So instead of 53%, we got what? We get 49. Okay, so less institutional interest during the pre and the post market session. So when trading McDonald's, most of the trades that are relevant are placed during market hours. It's not the same for all stocks. We have seen that before, but it is like that for McDonald's. So that's good. So then my next step, and here we'll see how it's going to be, but my next step is going to be to set a target using the daily time frame. So turning on AutoUFOs, let's see where the next UFO is. So that stock is not making all times high, as you can see. We do have red UFOs, okay, with McDonald's. And therefore, when I click on it to find out where the target should be, and notice how the target should be 209.75. Okay, and this to me, guys, sounds quite powerful. Okay, it sounds quite powerful because I mean, look at the distance from the current price to that red UFO. It's not making all times high, but what a great space for price movement. That could certainly be a powerful trade, assuming McDonald's will continue moving higher. So let's go ahead and put the trade together. So we have 180.94. Okay, so let me load McDonald's. This one is likely going to be a spread mark. So loading McDonald's. By the way, I'm just realizing I made a mistake placing the order with Microsoft because I made the order to be good till cancel. Yeah. So I want to change that. Okay. So I want to cancel replace. Okay. Okay. It's not allowing me to change it to good till cancel. Okay. So I'm just gonna cancel it. So cancel order and replace that order with a day order. Okay. That was my bad. Actually, even better. I could just come to the preferences. So, hey, here. I'm like, where are the preferences? For a minute, I was not seeing it. So, preferences. Okay, not desktop preferences. Sorry for that. Order placement preferences. So, preferences, order entry, and we're going to look at options trading. And I want by default the orders to be day only. So, that way, starting from now, it will be day only. Yes. Perfect. So that's it. Okay. So now I will need to close station and reopen for this to be the case. But starting from now, I would have the only order so I don't make that mistake. Okay. In any case, I think it's a good mistake for me to make. So you see how to rectify if you were to make the same mistake yourself. Okay. So I'm gonna go back to my analysis tab. I will still have my 195 call there. So I'm just gonna replace the same order I placed before. I was going to make the same mistake again, isn't it? Okay, so 3 dots, trade. That's a day order now. Very good. It's going to be market and then activation rule. And by the way, doing this cost me money, okay? Because with options trading, it's not the same with futures, for example, but with options trading, cancellations or replacement of orders imply an exchange fee. Okay, so it's not TradeStation charging you, it's the exchange charging. And TradeStation passes that cost into the customers. Okay, so keep that in mind. So that's why it's good to have a day order. So if you don't get filled today, you can always replace the order tomorrow. But if tomorrow the climate invalidates the trade, then you don't have to place the order and you don't have to cancel either, and therefore you avoid the fees. Okay. So yes, so the order is in, and now yes, I am gonna move into McDonald's. Okay, so loading McDonald's. I'm gonna have two cases. My target with McDonald's, it's 209.75 based on what we said before. And my entry, I kind of forgot. My entry is gonna be that green UFO, which is 180.94. Okay, so 180.94 is the entry. 209.75 is the target. Okay, so now expiration date is the big question. Okay, so how do we calculate expiration date? We're gonna look at a calculator, calculate the difference between 209.75 minus 180.94. Okay, this is $28.81, which is a great profit margin, and this based on the ATR, which is 4.80, as you can see on the bottom left of my screen. That's the daily ATR. That is 6 weeks times 7 is 42 days. So we will want at least 42 days for this trade to work well. Okay, so that is July 2nd. But in parallel, I also need to check when is the earnings for McDonald's and use that date. So earnings for McDonald's are happening on July 23. Okay, So even though July 2nd is almost there, July 23 is what I need. So then I'm going to move into July 17, which is the nearest to July 23, and I'm going to right click to analyze and buy a vertical spread. And I'm going to go back to the options chain and also right click and analyze and buy a single options. And I'm going to do this. I'm going to do this. Okay, here I was just dragging the wrong thing. I'm going to do this together in my planning so I can compare and evaluate what is better to do the spread or to do the single. Okay, so I'll start with the spread. And we will do this quickly given the time of the session, guys. So the target is 209. Okay, so in the spread, remember the rule is to sell options beyond the target. So instead of selling the 195, we're going to sell the 210. Okay, and we may need to adjust that, but this is going to be my starting point. Sorry, 1 second, guys. Sorry for that. Just a little itchy throat. And the strike that we buy needs to be between entry and target. So because the entry is 180, I think that a first starting point will be the 185, which is between entry and target. Okay. So notice how I only have the vertical spread selected. The single is not selected. Therefore, the information related to the Greeks, which in this case is the delta, is 38. That represents my spread. And 38 is too much. I want less than that. I want 30. And that means that I'm going to have to move the 210 higher. Maybe we'll do 220. Oh, sorry for that. 210. Yeah. Interesting. Okay. So, yeah, 210 is too much. Okay. So that means that I need to move up the 185 to the 190. Okay. So let's see what happens if I do 190. That's bringing me to 27.5. Okay, so if I move now the 210 to 220, now it's 31. So I guess that this is how good it can get when it comes to getting my delta to be around 30. Okay, and that makes me happy. Okay, that makes me happy with a gamma positive 177, but that gamma being negative, that one does not make me happy. Okay, that one is not making me happy. So another possibility, because we want gamma to be positive all the time, that's the perfect world. Is not always achievable, but is the perfect world. So we're gonna try to move to, let's say, the 230 or the 240. Let me see what we have in the option chain here. If we go to 230, 240, well, yeah, absolutely not. Yeah, even the 220 is only paying 12 cents. Yeah, so that's gonna make no sense. And this is a case where I believe that doing single option. Okay, so if I do a single option and I pick the 190 strike, here we go. Okay, so notice if I do the 190 strike, this is giving me around 30 delta, positive gamma at the entry and the target, and the cost of the trade is 360, right? If instead, funnily enough, is the same as Microsoft earlier, isn't it? But this is McDonald's. If I do the spread, okay, so the cost of the trade is going to be 345 instead of 350, slightly cheaper, but you get a little less delta, and the worst is that you get negative gamma at the target. So in this case, for me, it's pretty clear. Doing the single option trade is actually better. And therefore, the trade to be executed would be to buy the 17th of July expiration date 190 call on McDonald's, okay, and do it as we did before with an activation rule, okay? Do it with an activation rule where the activation rule and they order, right? So the activation rule tells you that if McDonald's, okay, if McDonald's is less than or equal to 180.94, so then you want to buy that call, okay, the 190 call that expires in July. So I'm just going to place the order. It's kind of a repeat of what we had before. It's a different stock, McDonald's instead of Microsoft, but the process is very similar. The spread was not providing an advantage here. And one of the reasons is, number one, because the strike price increments were like $10 at a time from 210 to 220. So that's one of the reasons. And the other reason as well is the expiration date being like 50 over days, I believe it was. If it was like 60, 70 days, it would also make a difference. Okay. In general, the further away the expiration date, the more expensive the stock, and the closer, the nearer the strike price increments, the more precise you get with the Greeks. But if you don't have that, then you cannot change it. And many times you would end up concluding, let's keep it simple. One single option trade does, if not the same, does better. So that's the case today with McDonald's. So I'm gonna click yes, 1, 2, 3. So the trade is in. Therefore, if I click on the manage tab, we have our McDonald's and Microsoft trades, both with day orders. We have our canceled order because of my mistake using a good till cancel duration. That's why the color is different, because you are out. It means the order has been canceled. And that's it. And that's what we've got today, my friends. So let me take a look at the chat box in case there is any question. And if not, we will call it a day. Let me see. Yeah, no questions on the chat, so I guess it's all good. Remember what I said at the beginning of the session, guys. Not sure all of you were here. Just in case not all of you were here, I'm just gonna quickly show it again. So moving to tradewithufos.com, and then the moment I get to our main website, I'm just gonna click on get together. And as I click here on get together, this is gonna bring our schedule. And at the beginning of the session, not all of you were here, probably. So I wanna make sure you realize there is a special session next Tuesday at 7 p.m. Eastern time. It's called Do's and Don'ts in Trading. You have to click and register, because that one will not be done on the YouTube channel. It's free, but it's gonna be done in a different platform. So click on it, okay? Click on it, and then you click on this link here, youcantrade.com events, do's and don'ts in trading, and that will bring you to another page where now you can go ahead and click on the blue button, register now, and you will be in, again, May 26, 7 to 8 p.m. New York time. So I will see you over the weekend, my friends. We have a sharpening session this weekend, isn't it? So I will see you over the weekend. I will see you again on Tuesday. And on Tuesday, I will see you twice. I will see you during the short-term session and then to talk about do's and don'ts. Okay, so hopefully I will see you there. Ahmed, what is the difference to buy long delta greater than 80 and 90 days out? I'm not sure what you mean by that, because I never talk about it this way. Greater than 80 and 90 days out. What's the difference? Maybe you want to send me an email, Ahmed, and I'll take it from there, because I'm not fully sure about what you mean. I never used a rule like that in the session, so I'm not sure. Muchas gracias, Charles, and thank you, everybody. You guys take care. See you next time, okay? Maybe actually next time is the sharpening session, so if you were to put together a detailed email with your question, Ahmed, I'd be more than glad. Maybe the sharpening session is the perfect place to answer your question there, okay? And everyone else, by the way, sharpening, I didn't say, but I mean, I'm assuming you know it. It's a perfect place for you to ask questions and clarify. So I expect a collection of emails from you with whatever questions you have as you are trading and going through methodologies and putting all of it together, okay? Take care, everybody. See you soon. Bye-bye.